not only have we ended way below that 20 DMA level of 24,314, we've even breached that 24,200 mark.
Right.
In fact, we tested that 24,180 mark, which was the recent swing low that was made on Friday before we made a very good comeback. My point is, if we have retested that level, who knows tomorrow, after the Fed meeting is out of the way, and now that we have seen such a bit of a sell-off so far this week, we could see some bit of a comeback, because after all, after 24,180, we saw such a big
Yeah.
turnaround in the market, and we saw the Nifty staging a very good rally on Friday. So who knows, tomorrow could be the turning point, or the day where we could see some bit of a buying coming in.
I think, if you look at the US markets, they are down 9 days in a row.
Yeah.
We are down 3 days in a row.
Hmm.
And probably, the global markets are now watching out for the Fed action, what they believe inflation is going, what they believe the rate cuts could look like in calendar year 2025.
Hmm.
A lot of things and a lot of events, probably the markets are waiting for and consolidating before that. So I think the US markets and the Federal Reserve both hold the key as to how we will perform in the next few trading sessions.
That's true, Yatin. Dow's, longest losing streak since
Mm.
1978. That's ninth straight day of losses that the Dow saw yesterday. Of course, a 25 basis point rate cut is all, priced into the market, but
Correct.
it's the future rate trajectory, and whether or not we're looking at a pause here on is something that we need to assess. For that, of course, we'll be watching out for what happens tonight. But in terms of our market action, as I mentioned, below that 24,200 mark, broader markets also moving in tandem with benchmarks. So the mid and small cap indices lost over 0.5% apiece. Banks were the worst hit today. We are holding on to that 52,000 mark, but it was a 700 point kind of a downtick on the Nifty Bank Index. Even the PSU Bank Index was down almost 2% or so. Barring the IT and pharma packs, all the other sectors were trading in the red. If you look at the advanced decline ratio, that was firmly in favor of losers today. And in terms of Nifty losers, the good part is yesterday we had only one Nifty gainer, Yatin. But today, thankfully, that's not the case. We have heavyweights, giving some bit of support to the index in terms of Reliance as well, right? And that stock did well in a weak market. Bajaj Auto, Wipro, Cipla, Dr. Reddy's, Trent, these were
Mm.
some of the other gainers. On the flip side, Tata Motors, that was a big drag today, 4% down on that one. Other PSU names also came under quite a bit of
Yeah.
pressure. I think Power Grid, Bharat Electronics, NTPC, Coal India, these were some of the other laggards. But I can spot a lot of movers in the broader end of the markets as well, Yatin. Which
Mhm.
were the ones that caught your attention?
So I think the new listings did well. We
Hmm.
had the Vishal Mega Mart, which listed at a very strong premium of nearly 45%. Sai Life, that ended the day high by 40%. The issue price of 549. But the clear star of the day, Nandita, is MobiKwik.
Yes.
279 is where the issue was subscribed, and the listing today ended 90% higher. So almost a double returns when it comes to MobiKwik. So all three listings did well. MobiKwik, as I said, 90% gains coming in to the issue price. But if you look at the broader end of markets, clearly the advance decline ratio was almost 1:3. Continues to be weak for the last 2 or 3 trading sessions. But in terms of gainers, we had stocks like KFintech, Bharti Hexa, Techno Electric doing well in trade, 5-7% move coming in there. Concord Bio also, that stock saw almost 6% move. What was not doing well is the likes of Deepak Fertilizer, shares were down 6%, NMDC down 6% after the Karnataka government has announced that they will be hiking, the duties on iron ore.
Hmm.
Obviously, the bill has been presented to the assembly. The final decision will come, but it is more or less given that there would be a 5,000 crore impact
Hmm.
on all of these mining companies in the state via this particular change of tax. PVR Inox 6% down, and Bayer Crop also down 5%.
Right, those were some of the movers and shakers. Yesterday, PVR Inox was holding out in a weak market. Today, I think, it was back in the FNO
Mm.
ban, and the stock saw some bit of a cut off there, sell off rather. But on that note, I want to talk about all the stocks that are on our radar this afternoon. The city gas distribution companies are on my
Yeah.
radar, but Yatin, I want to point out the fact that IGL has seen a very good up move today.
Mm.
Rebounding from day's lows, and in fact ending the day higher by about almost 6%,
Hmm.
although other companies like MGL and Gujarat Gas ended the day in the red. But there is a cautious report coming in from Nuvama on the entire city gas distribution lot. They've said that, the recent deallocation that the company saw by the government, the pace of that had, of course, taken the street by surprise. But the stocks have staged a very good rebound since the November lows. There was a knee-jerk reaction after the government cut the APM gas allocation to these companies by 20% in
Hmm.
November for a second straight month. But since then, there were murmurs that gas will come under GST,
Correct.
and because of that, we saw a very good rebound coming in on some of these stocks. From November lows, I want to point out IGL was up almost 22%. This is with respect to yesterday's close
Yeah.
price. Of course, today we saw a good up move in IGL. MGL is up 10%, and Gujarat Gas, that's up 12% from November lows. Now, reports are suggesting that GST gas under GST may not feature on the
Hmm.
GST Council meets agenda when they meet later this weekend, because uh, if the gas is brought under GST, that would lead to only one tax
Hmm.
for the companies to pay, because right now there are quite a few taxes that they pay, state VAT, central sales tax, central excise duty. So all of that will go, and
Yeah.
GST, if gas comes under GST, they will also be able to claim input tax credit, and that will bring their costs down. Now, Nuama has pointed out that as a result of the cut in APM gas, obviously the procurement price or cost of gas will go up for these
Hmm.
companies as they look for alternative sources like high pressure, high temperature gas, and the likes, new well gas or spot LNG for that matter.
Hmm.
But that will really jack up their costs. And the street is not factoring in the fact that, the profitability will take a serious hit for these
Yeah.
companies, and margins will also suffer. And aside of that, if you look at the issue of gas under GST, there is a lot of to and fro happening, right? And there is no consensus as such. Because of that, the timing of this move to happen is uncertain. And aside of that, if that happens, Nuvama has said that the margins could see a potential upside of 9 to 11% for some of these companies
Hmm.
for FY26, the EBITDA, so to say.
Hmm. Hmm.
And of course, if you look at the price of the cost factor, it will go up because, as I mentioned, the source of the gas. They will be looking at the costlier sources of gas, but because of the fact that there is uncertainty as to when gas will come under GST,
Hmm.
there is a lot of uncertainty in terms of financials. For third quarter in particular, the EBITDA margin per standard cubic meter is expected to plunge 17 to 44% on a quarter-on-quarter basis, according to Nuama. And all these companies have undertaken price hikes as well,
Yeah.
but they were far lower than
Hmm.
what really is necessary for the companies to offset the hike in costs. So, which is why the Nuama has pointed out that Q3 EBITDA margin will see a 1% realization uptick as a result of the gas price hike, but it falls short of the 4 to 11% weighted average cost hike of the prices, right? And which is why they have reiterated the reduced rating on IGL and MGL. And for Gujarat Gas, they have a whole rating because Gujarat Gas caters more to the industrial side. So all in all, cautious stance on some of these gas companies, but a lot depends on when really natural gas comes under GST.
Right, and that is the view of Nuama on gas stocks. But Nuama also came out with a report on paint industry. It is quite important given the fact that the shares of Asian Paints are clearly underperforming the markets after several decades of outperformance. Clearly, Asian Paints is something which is now out of the institutional radar. Talking specifically about Asian Paints, Nuama believes that because it's a pan-India player, and given the fact that JSW Paints and Birla Opus from Birla Group is now competing with this brand, it will be the most impacted, especially given the fact that Asian Paints' presence is in urban India. The urban consumption slowdown and the overall spending slowdown will impact Asian Paints the most. In fact, smaller companies like Berger Paints as well as Indigo Paints would not get impacted as bad as Asian Paints, because Asian Paints has a lot to deal from urban slowdown to growing competition in the higher volume bracket. Now, Birla Opus entering the big cities has limited initial impact on Berger Paints and Indigo Paints, according to Nuama's report, and they prefer both Berger Paints and Indigo Paints, wherein they have a buy rating. And obviously, if you look at the paint industry versus the paint industry itself, they prefer Pidilite as a stock. Three stocks in focus: Berger Paint, Indigo Paint, and Pidilite. Given the fact that Asian Paints is all set to get impacted with the entry of Birla Opus as well as JSW Paints.
Right, when Birla Opus was going to make an entry into the market, I think at that point of time everybody felt that Berger Paint will be the most impacted, because Birla's never really wanted to be the number one player in the paint sector. But given the fact that Berger Paints is more prevalent in the tier 2 cities, and Grasim, Birla Opus rather has poses more risk to Asian Paints because it's present in the bigger cities. So that's about paint sector. But autos, this is another sector that's in focus, and that is of course bearing the brunt of the urban consumption slowdown as well, right? Because the Vahan registration data that came out last month, pointed to some bit of uptick in festive sales. But for the month of December, from 1st to 17th, the data that has come out has painted a pretty bleak picture, Yatin, because last month we saw that there was some bit of uptick in festive demand and sales for two-wheelers. But this time around, two-wheelers have taken a sharp knock when it comes to registrations. If you look at the Vahan data, retail vehicle registrations overall have fallen 19% on a YY basis to 9.79 lakh units compared to 12.1 lakh units in the same period last year. There has been a major fall in two-wheeler registrations, which are down 24% on a YY basis for the period 1st December to 17 December. Passenger vehicle and commercial vehicle, which had been witnessing some bit of slowdown, I think that there the demand was weak, but surprisingly they have relatively outperformed. If you look at the PV sales, relatively outperformed, because they have dropped just about 3.3% on a YY basis, and CV, that segment has seen a 8.5% drop on a YY basis. So all of them have outperformed the drop in two-wheeler registrations. The registration for petrol power vehicles are down 25%, and electric CNG categories seem to have outperformed. FADA in fact had also come out with data recently, and they had also pointed to weak sentiment, but they were hopeful of a pickup, amid stable rural demand, year-end offers, as well as a benign inflation outlook. But that hasn't really happened. Post the Vahan registration data, UBS has also come out with a report on autos. They are saying that expect overall 7 to 9% YY decline in December retail sales, and the decline in December retail sales will be led by companies like Bajaj Auto as well as Hero MotoCorp, because they are expected to record a 15% decline in sales. TVS, Honda, these are some of the companies that have gained market share if you look at the YY as well as month-on-month basis, and Hero Moto is the one that has lost the most in terms of market share, both on a YY as well as month-on-month basis. TVS and Eicher Motors, on the other hand, are on track to post growth when it comes to December sales. EVs, on the other hand, will continue to gain traction going forward, even though market leaders have seen some bit of erosion in volume. So all in all, Yatin, no pickup in festive sales, and two-wheelers, surprisingly, although of course we have seen the trend of urban consumption slow down, but rural seem to be doing well.
Correct.
In the wake of that, if you see such a big drop in the registration data for two-wheelers, that kind of makes you think as to where festive sales, whether festive sales are going to pick up or not going forward.
Correct. And Vahan data sometimes is misleading, because the overall data takes time to populate. I think the actual data from FADA is about
key to watch will be the Federal Reserve meet outcome later tonight, and we will be reacting to it tomorrow. So, we will be getting your global voice as well to decode the Fed's commentary on future rate trajectory. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.